Hello traders, welcome to this live intraday strategy webinar on daily SB Trade Desk, excuse me. Today is Tuesday, August 7th. Good to be with you guys this morning. A little off cue here. Good morning. Peter, I got you on the SPX. Mark, all three Pete's in the house. Steve, Ty, Ziad, great to see you guys this morning. So on the menu, obviously we got the RBA interest rate decision last night. They did hold rates at 1.5%, but it was a little bit more of a hawkish slant um, to the commentary. Okay, so they said that inflation is going to be expected to slow a little bit this year, but expected to actually pick up above expectations next year. Certainly leaning towards again um, the possibility of tightening or hikes down the road. Aussie seeing a nice pop. We're still in the consolidation range. Okay, so we're not out of the woods yet. Um, but we'll go over that. Sterling dollar also on the menu. Pound Oz and Euro Oz from last night's updates. Both of those trades we've been tracking for the last couple of weeks made big breaks last week. So we do want to pay attention to both of those. Pound Oz just dropping like a rock. DXY, we'll go over back and cover Euro, dollar yen. Holding a short there as disclaimer alongside with the swing trades there. Dollar CAD and crude. And Pete wants to take a look at SPX. So we got that on the list for Peter. Any other trade setups or pairs, assets that you'd like to cover? As always, feel free to throw them on the message board at any time. So real quick, let's jump right into the Aussie. You know, the bigger picture, Ty, and I see you in the room. I know you know the level I'm talking about. 73.27 has been the line in the sand, if you will, the big support level, the lows from last year's July drop, or May drop rather. And you know, the basic focus is still 73.27 or a breach above 75. This is still the entire focus for Aussie. Here's what it looks like on the daily chart. You can see it on the left here. So obviously we're still in the consolidation range. That same level, once again, 73.27, 73.36 now converges on the lower bounds of the triangle or the wedge pattern, further giving validation to that being a critical threshold for price. So here's the reversal. We're heading up towards slope resistance. This is where you want to look for resistance, 74.40s, 74.50s. A break above 74.55, in my mind, on a closed basis, would validate the breakout, but we can't get too excited until we get through 75, 74.90, this region right here. Basic trendline resistance, 4-point touch. 50% retracement, decline from the highs that you made back here in June, and 100% extension from the advance off the lows. So nice convergence right there. That's your bearish invalidation. So if you're holding longs on Aussie, you know, you kind of want to scale out as you get towards that upper parallel, bring your stops to break even or better. 74.55 is the break we need to see to really get that launching point to key resistance. Okay. Some of you might be thinking, well, should we be looking for short exposure on a move into this? I was kind of looking for that possibility. I don't. What's the word I want to use? I don't want to really get too aggressive on that idea, but what I was looking at was this. Just the 100 comes in right here. So if this was just two equal legs up, you know, you could see some failure here on open to the US trade session. You'd be tempted to take the short there for a near-term scalp, but even for me, you know, it's just not my cup of tea. I'm still of the mindset that you get a larger pull higher here um, in Aussie. I know that Jamie was looking for the move lower, but I'm looking at the consolidation at support. These typically are continuation patterns, to be quite frank with you. These consolidation, I have seen them be terminal, so it could be, you know, sort of the bottom of the range. We don't know. Okay, we're in the range until we're not. Ty says everything's still, yeah, Ty, you take the words right out of my mouth. We're in the range until we're not. So again, if you're holding long exposure, you know, look to clean it up as you get into this region. If we get the close above 74.55, great. You know, I'd still favor sort of buying pullbacks towards 75 would still be the break, but you know, until we clear this key region of resistance, respect the range. Okay, respect the range. We're still in overbought condition, so it's not a time to start fighting this as far as trying to short this at any means. But if you're holding longs, like I said, I got out way too early, but you'd want to be looking to sort of settle that around here. Now, as far as support, so let's say we do get a pullback, right? Mike, where can we try to get into this thing? Weekly open comes in at 73.97, basically looking at 74 handle. On a pullback, I'd kind of want to see that hold for me to start getting a little bit more comfortable and trying to, get on the long side here beyond this point. But we're checking the upper sides of the range. I really can't stress that enough, guys. With the market conditions that we're in, trying to front run the break probably isn't the best idea yet. So there's still some room into the apex of this where this thing could range, but near term, looking for that stretch higher near 74.40s, 74.50. Questions. Roxy says, hi, Michael. Hope you're well. Great to see you, Roxy. Could we possibly look at BTC for a possible bounce target? I'd like to scale out of my long position. Thank you. Yeah, Roxy, we'll take a look for BTC. You got it. Okay, that's number one. So RBA giving us the lift we're looking for in Aussie, looking to see that lift start teeter out near slope resistance. Again, this is the breakout that would validate a near-term move. You only got 50 pips before you start to run into bigger resistance, and that's the breakout we need to see. So that's Aussie. Going once, going twice, no change to any of the intraday levels. Sold. Okay, here's pound. So what I wanted to highlight here is, yes, I think the risk is still lower, but I am looking at 28.77 as sort of a critical level in price. So you're looking at the basic 618 retracement from the advance off the lows you made in 2016, but you're also looking at the lower median line parallel for the formation we've been following off the yearly highs. It's just been insane, ridiculous. This is the weekly chart, momentum coming into 30 support. Daily chart looks like this. There's that 618. Again, there's that slope range. We talked about it yesterday. Resistance at the monthly open, bearish invalidation 131.64. But the basic immediate focus is on a drop towards this region. Now you're seeing a little bit of a lift here in overnight trade. You saw this bounce up, but it's starting to melt down again. Here's what pound dollar looks like again. Weekly chart, no change there. Right, big region of just confluence support, an area to pay attention to. Daily chart hasn't changed. Okay, intraday, and here's what it looks like. So I'm looking for, there's two ways you can play this. It's kind of not worth it in my mind to try to press the short to look that last stab into 128.77, but I wanted to bring it to your attention because if you do get a flush out, okay, you do have CPI data coming out of the United States towards the latter part of the week. You do have some UK data towards the latter part of the week. So if you do get a final washout dump lower, 28.77 is a good region to look. Okay, keep your eyes peeled for that. I'm not going to start trading the long side of this just yet, but that's kind of the region I'd love to see some sort of low. Now, looking at the momentum signature, yes, it does look like we're marking some divergence into these lows. Let's see if we can get our trigger back on view here. Still got some room for that. So, there's not really necessarily a play here just yet, but just be on the lookout. Be on the lookout if we get that last washout, that dump towards 28.77. You might not even make it that low, but it is such a critical region that if we get a washout dump into there, it might be a nice area to start fading, looking for a bump higher in sterling. Daily chart looks like this, no change. Any questions on the pound? It's a tough pickle to get into, this one. It's definitely still worth tracking, I think. So here's number 3, pound Aussie. Wow. So I was favoring the upside break of this. You guys know where I stand on this. We talked about it last week. The upside move did rally right into last month's open basic trendline resistance. You got a strong reversal day right off that. Following day, we just collapsed below 76.16. That was our line in the sand. So I do think yesterday just kind of wanted to highlight that still the focus is lower. You're looking for 74.70 would be your next level. It's a 38.2 retracement, real basic. Former swing lows from last year's June decline takes you to 73.93. That converges on slope. This is not a parallel, by the way. This is a simple 3-4 point touch support slope. So this is actually an expanding pattern here. So, I think there's still room to the downside. Here's pound Aussie. Okay, you took out 74.70 in overnight trade. You're now coming up against that slope. Again, it's a 4-point touch support slope. Okay, 1, 2, 3, 4. We're there right now. That comes in just ahead of these lows now, a little ahead of schedule. So downside exposure on pound Oz. Watch out here. It's obviously still looking lower, but as you head into that 74 handle, you might get some recovery. Okay, the near-term picture hasn't been worth showing. I mean, I've been looking for some structure on this for you guys to kind of give you something on the near-term approach to work with, but there's really nothing. All of these levels are the same levels we're talking about with the daily chart. So it's just kind of good to keep the broader picture in play. Obviously, intraday momentum is still in oversold territory, so the propensity for the drop is still there. 74 is sort of a level I think you still might get some play off of. Resistance now drops to 76.16, former support. Bearish invalidation now drops to the monthly open, that confluence resistance level right there, right around 77. All right, so could see a little bit of a stretch, sort of exhaustion rebound off this level. I'm not interested in playing it really, to be honest with you. But watch these downside targets. Still focuses lower below 76.16. Any questions on pound Aussie? Interesting cross. Mark, is that in this session? Or are you talking about generally? He says the audio is cleared up a bit, but it had been very breaky. Okay. Yeah, keep me updated, guys. Whenever I'm working, yeah, okay, thanks. Yeah, whenever I'm working from this remote daily FX office, they're just having serious issues here. Okay. Euro Aussie, another one that was coiled up to no end. Here's Euro Aussie from last night. Obviously we were talking about this coil up for weeks. Okay, last month's opening range low came in at 57.28 on a closed basis. That's been governing the lows since that initial July opening range. Resistance 58.46. You saw a couple of probes above, but we couldn't get a close above since that July open. There's the break. Initial target was 56.22. It's the 2017 high day reversal close. It was actually an outside reversal day. And that converges right in the 200-day moving average. So a good spot. So a good spot for support. Ty is saying so much for Ido. Yeah, so we have to keep in mind a couple of things, Ty. Actually, Ido was correct on that session. Remember, that Ido search, I know exactly what you're talking about. So we highlighted in the previous update the fact that the Euro Aussie had topped the one-day percentage charts for performance. And actually, this was on the 1st, okay, of the month. So we actually did see an upswing that following day, Ty. And that's what Ido Search was calling. It was a one-day prediction based on a 10-day look back. So that following session, we actually did turn higher. Okay, it's just that it fizzled out right near the range highs and then we broke down again. So you want to take these with a grain of salt, right? This is kind of like an added tell because we were trading at support. We were trading at 57.48. This thing got, whoops. Where's Euro Oz? I'm looking at pound Oz. Here's Euro Oz. That was on the 1st. So here it is, right? We actually did get a swing higher. It was much shallower than expected. Yeah, it didn't give you much. So we were trading at what, 57.48. It got as high as 57.96, so it gave you 50 pips to the upside, and then it collapsed. So we just got to keep in mind the timing of that. And again, these lookbacks, that's all they are, right? They're just lookbacks in pattern recognition. So last 10, based on the last 10 days of price action, the matches that were found gave you an average upside of 1%, average downside of negative 0.2% just over the next 24-hour period. So you did get a 50 pip upswing, but yeah, it collapsed pretty quick. I know, Ty. I'm just joking. He says I'm just pulling your leg. No, it's good to take note. It's good to take note of those things. It's good to take note of those things. Absolutely. You'll often see that we don't really. Am I gone the audio? Check. No, it's still here. You actually see that for IDO, generally speaking, the longer the look back, the more emphasis you put um, on the analysis. So you very rarely actually see us quoting the 10-day look back. It's usually the larger time frames give you the stronger signals. Long story short, here we are, 56.22 held for 2 days. The 200-day moving average, again, the outside high day reversal close for 2017. And here's the break and the tag of that lower target at 55.82 rather. That's the 50% retracement. Today's low was 55.80. We literally came right into that, saw a bit of a bounce. Momentum checking 40. Okay, checking 40. Again, just like pound Oz, if we're gonna get a bounce, this might be the place to bounce. Now, putting things in perspective, guys, we just talked about pound dollar, the possibility of move lower. We just talked about Aussie dollar, okay, coming up near resistance, so we could turn, which would mean Euro Aussie, pound Aussie could see a little bit of a bounce. Okay, could see a little bit of a bounce if Aussie turns lower, right after this recent run up post RBA. This could be the near-term rebound in Euro Aussie, could be the near-term rebound in Pound Aussie, both checking near-term supports. So just wanted to highlight both of those trades at this point. If you've been trading the downside on the near-term approach, this is a good area again to start cleaning up your book a little bit, bringing your stops definitely on a defensive stance at this point, 100% on both of those. But coming into some interesting area, I was so glad to see these both break. These things. Were coiled up like no one's business. And again, gets the juices flowing. You know what I mean? We're going to start to see volatility start to pick up in the days ahead, God willing. Number 4, Euro Oz. Any questions? Again, similar to the situation with Pound Oz, there's really nothing on the intraday charts that comes out as far as structure is concerned to give us any clarity on this. So the daily chart's still kind of been the only thing I've been working with. On Euro Oz, so that's interesting. Huh. So 618 line of this range catches this low. The 618 line of this range catches this pivot, right? Break, acceleration, support, support, break, acceleration, resistance, acceleration, kind of messy, resistance. Give me one sec. Let me just scope this out. Hmm. Hmm. You see that, guys? on divergence. It's a weak divergence signal. This actually is probably going to be a bigger vault or a bigger recovery to the upside. And one other thing, if this is a near-term consol, I just want to see what this looks like. Bear with me. This is going to get kind of messy. I just want to see what this looks like. This is, oops. Huh. Okay, so a couple things just to bring to your attention here on near-term chart. I actually didn't check this out. I was looking at it last night, and I just nothing kind of popped out at me, but this looks pretty interesting. So we just talked about the fact that this is kind of a support level you want to pay attention to, right? It's the 50% retracement. Also converges on the 618 of this new slope that we just added. Divergence on the intraday, it's a good area to find some support. And the other thing I just wanted to highlight is this, though. If this is a near-term consolidation, right, just for the July range, which essentially never broke, right? Here's the July opening range. If this is a consolidation, the measured move of that, let me just clean this up. The measured move of that actually takes this thing all the way down here into the 54s. So that would suggest near term, this would be treated as corrective. So you don't want to get too overzealous, but just some levels to keep in mind. Let's see what all this is. This is the weekly open. Don't need this. That was the opening range lows. Okay. Okay. That's interesting. Okay, so near-term resistance at the weekly opening range high, that'd be a basic 236. Even if you're just going to come and make a basic 236, check at the lows, that still takes you near 56, 54. That's sort of resistance. Near-term bearish inval. Broadly, still think the risk is for a dump lower near 55. All right, interesting stuff. Not necessarily a setup here per se just yet. You're already almost 30 pips off the low, but it does look at least in on the near term like it's poised for a little bit larger of a recovery here off that level. Okay, interesting stuff. Any questions on Euro Oz? Nice drop into support. Okay, circling back, let's hit the dollar crosses. So here's what the DXY looks like. This thing, try not to use explicits, but has been the bane of my existence. We talked about the 200 long week moving average has been sort of the biggest fake out on this thing for the last like 3 months. Okay, here's the May advance, failure at the 200-day moving average. Here's the June advance, failure at the 200-day moving average. Here's the July advance, failure at the 200-day moving average. Here we are again, failing at the 200-day moving average. Momentum flatlining, right? Even though price has been moving higher. So you are getting some of that divergence on the daily chart or the weekly charts, but we can't take action off that. We've been looking for near-term price action to tell us that we're making the turn. We're starting to finally get that. Okay, remember the daily chart? We've been following this, no change on these levels. Okay. Oh, this update. Okay. No change on these daily levels. We've been talking about the June high day close at 95.32. And I told you guys yesterday, if we get a daily close above that, in my mind, it kind of would be a breakout. You know what I mean? This has sort of been a region of which it's the high day close that we made back in June, but on the stretch that we made in July, we failed miserably. When we probed through that level right here on the 19th, we closed way lower. So if we got a daily close above 95.32, in my mind, that was pretty much it. Guess what yesterday's close was? 95.36. So 4 pips higher. And here's the turnaround. Okay, momentum looks still pretty good on that trend line, and it looks like we, all things held constant, guys, we're just coming off the range highs of the year. So you're absolutely right, Ty, in saying that all the ranges are still holding. Here's what the intraday chart looks like. Let me get the 120 there. Here are the levels you want to take note of. Okay, so initial support. Well, let me say this: initial support, like right now, is going to be right into the 95 handle, 94, 97. And it's not just because it's a big figure, it's Friday's objective swing low. And Friday we're non-farm payroll. So the non-farm payroll sell-off, we paused right there. You have former swing lows, you have former swing highs, this whole region, okay, 94, 97, 94, 87. It's kind of where you would want to expect to see a little bit of a bump or a little bit of bounce off support. Ultimately, that's the break that sets us on course and validates that a more significant high is in play. But kind of an easy play just because you're coming off of the range highs on strong divergence. You know what I mean? Beautiful. I love to see it, and that's what gave me a little bit more confidence on pulling the trigger for Aussie. Dollar yen is just kind of an added bonus, so we'll look at that in a little bit. I feel dirty whenever I trade dollar yen, but it's working, so I can't complain. Any questions on DXY before we move off? Same levels apply, okay? Still looking for resistance at 95.32 on any type of rebound from here. The weekly open gap actually comes in at 95.26, so a little bit lower beyond this, okay, for the weekly open. That's where you'd want to see resistance first, or I want to see resistance hold there to keep the downside pressure on play. That is DXY. Number 5. Number 6, Euro. Obviously, DXY turns lower, Euro turns higher. Level of support that we turned off of, I hope all of you are paying attention, was the 15.54, 15.30 support level. Same level we've been talking about for days, weeks. It's right here. On the weekly chart, obviously 116 was the break last week that really put this in a very precarious situation. I'll show you the weekly chart right now on the Euro. We'd need to clear above 116 on a weekly close basis to refute this signal. Still at risk, okay? The rebound came from a beautiful spot, but you don't get to check. Okay, we're back. Until we make some progress above 116 on a weekly close basis. So use some caution here. Keep in mind that momentum trigger that we've been watching is still in play. Okay, so I'm watching with great interest this week to see how Euro performs and if we are able to make any progress through 116 on the upside on a weekly close basis. A trigger here would certainly shift things. So meantime, near term, you're coming into those initial ranges right now. Here's 116.04 as we speak. That is the previous, actually that is still the concrete operable yearly low day reversal close. That's still the low day close of the year. So 1603, we're trading there right now. Near-term resistance. Intraday looks like this. Okay, here's what the level looked like. Again, on the daily chart earlier in the week, there was the break. There's that key level we talked about, 1530, 1554. That was the region to pay attention to. Look for a reaction there, and boy, did we get it. right? Boy, did we get it. Here's euro earlier in the week. There is that key region of support. That's a reaction if I ever saw one. Okay, so the point being, we came into major support. We got the rebound we were looking for out of any long positions here because this is sort of the level, the break, if you will, that turned us bearish late last week. So objectively, we would need to see price crossing 16 to get or to validate a little bit more of a concrete low is in place and to favor continued long side play in the euro. That being said, euro is testing resistance into the open of US trade. Plain and simple. Okay. So all we did here is basically, if this is a 240-minute chart, right here is a 120. All we did is a full round trip. Drop, drop, bounce, back into resistance. Okay. Euro now testing the breakout level from the triangle. Right. That's another, Ty, great point. Great point. So triangle support, right? Basic technical analysis 101, your break of support, test of resistance. This would be the resumption mark, which is why I say for anyone who's holding longs, this is where you take out most of your positions, stops at very defensive at break even or better, better off at break even or better. This is the area, if you're gonna fail and euro's gonna maintain or continue lower, this is where it would happen. So you might be thinking to yourself, well, if that's the case, Mike, well, is this a good short entry? What I'm looking at is if we head into the US trade session, we spike into this region, we get some, decent triggers, it might be a decent short just for a scalp. But for me, again, I'm working off the base case scenario that I want to see this broader consolidation actually get reversed and break higher. That's just, again, my opinion. Price action has not given us any indication that we should be taking an aggressive stance like that yet, but it's all about today's close. The close northbound of 1604, specifically 1616, I do think you get a larger recovery in the euro. July open, which is not going to be as critical a region right now, comes in at 1675, but the reason I leave that is because the August open is just higher, 1691. So on your next break, it pays, in my opinion, to get out or take your profits at 1675 rather, if you get the break, then see what happens at the monthly open. But at that point, at this point, monthly open, that's going to be the breakout that gives us a reversal signal essentially in euro. Right now, I'm just treating this as a near-term recovery within the breakdown. We have to clear above this region for me to change, the technical damage that was done with this break last week. So maybe a little higher into the US trade session, 1616, 1617. Look for a reaction there if it's going to continue to maintain the lower drop. If it breaks higher, again, I would expect to see a larger recovery towards 1675 again. Ty says, shortest fifth wave in history. We now look like March to April 18 sideways. Come again? What about the April 18? What about that day? You thinking like this? So basically like the drop that we made here, right? Very similar. We were looking at a consolidation. The drop failed. We came right back into the means, but at the end of the day, that formation did break lower. That's my whole point, is that, yes, I did like the long off this region, but we have to see what happens here. If this breaks, it's worth a play to the monthly open again. But even in that kind of scenario, if we were to see the same type of price action unfold, that would still be a failure and the risk would be lower. So the 18th really brought the euro dollar crash to start. So this break here, yeah, I would argue it's even after that. To be honest with you, I'd argue it's the 23rd, because if we, once here, this is the consolidation we were looking at. Once we broke that and then we recovered, we took that consolidation to the end. So even on the 18th, while that broke, you saw a pause there. It could have been another fake out like right here, right? It was really this 23rd close below and then hold as resistance. That was the confirmation for the turn. That's where this thing started to fall apart. So for me, it could be a similar situation here where you break lower, you test that lower parallel as resistance. If we fail here, certainly the onside risk is still 1495, 1448. But first things first, we have to see some sort of strong reaction here today in euro. So exciting stuff. A lot of these trades coming to nice areas here. Dollar yen. Any questions on euro before I move off? Levels unchanged from that report earlier in the week. Now trading at resistance. Dollar yen. Here's dollar yen. So yesterday in the webinar we were talking about this. I know me and you, Ty, you're asking possible entries for the dollar yen. I actually jumped in a little bit better of an entry than we had on the swing. The swing entry was 1140. I got in just higher than that because it started to fail, right? So remember this chart, Ty? I was talking to you about 1162. That was my ideal entry. That was a sweet spot I was looking for. 50% retracement. You had slope there. So I was looking for sort of a decent entry there. You didn't quite get it. Shortly after the webinar, again, once we start to fail, we got a couple of dojis in there. Slipped it in real quick, but we're still into that trade now. I do want to see a 1088 clip. It's the 618 retracement longer term, but it's also the November lows and slope. Okay. It looks like we're running out of steam right here. I was kind of staring at this earlier before the webinar. Here's what like the 30-minute looks like. So, if we crack back above this, maybe I'll shave a little bit off if we get above 1115. But, all things held constant, just stay objective. Weekly open resistance. Come on. Weekly open resistance is 111.21. Okay, that's where we open the week. Obviously, in the initial support, break, instant resistance, pushback. So if we do rally this, I would get concerned on the position. If we get back above 111.22, I'd probably bail on it. Keep in mind, again, guys, try not to mix the strategies. If you took the short based on the swing setup, we want to stick with the limit and the stop that's presented there. I'm talking a little bit more intraday. So I've been chipping away on the entry, chipping away on the exit. At this point, again, I actually took a little bit off, but I still have the bulk of the position on. So if we get past 120, I'd get a little concerned. I do want to take a little bit off here, or a chunk off here. Remember, the target on the swing trade is actually 110.65, a little bit lower. He's got it right ahead of these lows, which I love. But for me, just from a slope standpoint, Fibonacci standpoint, former swing lows, an area of which I'd probably look to unload most of the position if dollar yen continues to drop. I'm very respectful of the fact that this is dollar yen, and our estranged relationship has caused strain in the past. So we'll be respectful of price action if things turn on us. Mark says Jamie brought the stop to break even. Oh, did he? Was that on Twitter? He tweeted it. Okay, great. Awesome. So your stop would be still back at 1140. For me, on a swing trade, on an intraday type of trade, the way I've been positioning on this, Mark, again, I take off the bulk of the position on 1120. I'd lock in 20 pips or 25 pips, whatever, and then a quarter of the trade I'd leave at break even. So if it does rally, the gains I forego are a lot littler. I'm way more defensive on the near term stuff, right? Because I'm much more heavily leveraged. So we don't want to sit in a trade that's moving against us for too long. So those are the levels. Any questions? Your ideal scenario, okay? Your ideal scenario is that this thing comes back into 1121. Our stops are break even on the swing trade, so we're good at 1140. But ideal scenario, this comes into 1121 here and fails, and then moves down lower into that 110.88 region, 110.84. That's like dreamland, ideal scenario type of play. Questions on dollar yen, the abomination in full swing, right? 110.88. Here's what it looks like on the daily chart, by the way. Another reason why I like that drop. Former swing lows from November of last year. 618 retracement, obviously, the 38.2 line, if I'm not mistaken. Yep. Of the broader slope we've been following. So a nice spot. Nice spot. Dollar yen on the weekly, going backwards order here, guys. Sorry, forgive me for that. But I just wanted to highlight why 110.88 for me is another big region. Again, looking at this objectively, from the larger weekly time frame, you can see the pivots that we've seen along this region are no joke, right? Now, just lower at 110.16, ahead of the levels that both me and Jamie are looking at, 110.55, 110.65, is going to be that longer term 52-week moving average. So, we got some trouble here. We got to get through this 110. 88, 110.50 region to validate that a more significant high is in play here for dollar yen. Questions, comments, concerns? All right, number 7, dollar yen. Number 8, dollar CAD. I haven't had any kahunas to get into this. This is what I was talking to you guys about yesterday, though. This is the region, okay, 29.56 into 29.67. We probed into it again. I don't know what to do. I want to be long off this region for a rebound, but every long that we've taken in dollar CAD has just been so short-lived. So look, I don't want to be calling the low, but I want to be recognizing where markets are vulnerable for one, and this is it. Okay, basic slope off the highs. If you take a parallel of that off these lows, you see that line in red. Takes you a little bit lower. Okay, this is a beautiful Fibonacci confluence. You guys know I love these confluence regions. So the 100% extension from the decline off the highs that we made back here in June converges on the 50% retracement of the ascent that we made off of April. And both of those converge on slope, maybe a little bit lower. Okay, downslope last week, now upslope support. All of that converges down here. So it still extends into 2940. So I kind of been reluctant to do anything. I don't want to sell into support. At the same time, we haven't gotten any really compelling long triggers yet, but looking for a possible washout down here. You know what I'm saying? Near term for a recovery. It would only be towards the median line, max 130.66. I'd start to look for failure again if we get up there, but I'm mindful of this support barrier. Okay. At the end of the day, if you break below 29.40, there's really nothing until like 28.80s. So you got room to the downside if it breaks. Near term, though, I do think that this decline is vulnerable into this region. Now it's interesting because we've kind of been looking for broader dollar weakness, but we can't just take a point blanche, a carte blanche rather, bias against all the crosses. Dollar CAD for a long dollar position, this is actually the one I'd be looking at with most intent for a near-term dollar rally if we do bounce. Look a little bit lower, 2940s into 2950s. This region here is what I'm looking for immediate support on this dollar CAD decline. Here's the 120. And again, there's reasons for that aside from the near-term chart. Again, here's your daily chart for dollar CAD, right? You have your 100-day moving average in this region. You got that 100% extension. We just talked about that. The 50% retracement. We also talked about that. Just basic downtrend support. Take it back to a weekly chart, and even the weekly charts highlight the long 200-week moving average. Basic trendline support off the lows. And that basically points lower in dollar CAD. Questions on the loonie? Now, interestingly enough, we're seeing crude. A lot of times you see people talk about these too because of the heavy export nature of Canada and crude. But this is obviously CAD strength, right? So I do think crude probably has a little bit more to go. Here's the crude rebound. We've been talking about this chart, guys. I know all of you are familiar with this. Okay, here's the crude on the weekly standpoint. We brought to your attention this sliding parallel of the same slope that we've been following from the lows of 2016. You got a really nice move off that last week. So the upslope or a little bit of a recovery off of this confluence region, your 2010 low, and zoom all the way back here. Okay, your 2010 low converged on that slope, 67.14. Last week's low, 66.90. Probed right into it. We posted an outside day reversal off support. Ever since then, we've been highlighting the threat of a rally. At the end of the day, like I said, I wouldn't be surprised if we do make a new low. Near term, you could see this stretch even as high as 71, but I still think the broader risk is for one last low here before we start to wash out. So near term, sure, look for the swing higher, but don't expect it, at least in my humble opinion, to last too long. Here's a 240-minute chart. Okay, not out of the woods yet. 60 resistance on momentum, not out of the woods yet. So no change to any of the crude levels. Now, Pete, you still in the room? He was asking about SPX, that's what it was, 10. Here's what the SPX looks like. I have us at resistance. I mean, it sounds absurd because is there resistance in the SPX? Probably not, but I have us coming into an area of interesting resistance here. A couple of levels that I'm looking at, Pete. You have the high day reversal close for the year. That's 28.51. The 1618 extension from the advance off the lows you made in March. Boom, boom, boom. First leg up. Gives you 28.60, and that's why we were talking ahead of the release or ahead of the webinar. That's the region I think we could get some kickback. Now, a slope. Are we back? Are we back? Okay. Now the slope of the pitchfork we've been following, the modified pitchfork off the low, is pretty good at resistance. 50 line was pretty good at support. Here's resistance and resistance again. You know what I mean? So I don't want to be the guy calling resistance in SPX, but if we're going to get a kickback, this is where you'd expect it. So let's clean this up a little bit. Monthly open support comes in here, right along the 50 line now. 38.2. This is null and void. 786. Scratch it for now. 100% extension is null and void. Bullish invalidation. We noted this last week, actually. Who was it here that was in the webinar? Someone was talking about a drop into this region, and I was telling you take a little off and leave a little on the table for the drop lower. It ended up reversing that day, right? Can't recall who it was I was talking to, but I hope you did that. I hope you took some off there. This is not a double top. The right side is way too confirmed internally. Maybe a temporary pullback, but that is a continuation correction. So no, who's talking about a double top, Ty? Peter says it was me, and yes, I did. All right. I was thinking about you, Pete. Great. So he did take a little off there, and I hope you're break even on the rest. But Ty, no one's talking about a double top. We're noting resistance, right? Resistance, resistance. A double top formation wouldn't even, there's no reference at all here for a double top. And the thing that people make a mistake with is that they think every test of resistance is marking a double top. No, a high is just a high. It's an all-time high. It's a close high. These are resistance levels. A double top wouldn't even come into play until you break these lows. Then you have a measured objective range to trade off of. So no one's saying anything about a double top. We're just saying if we're going to get some kickback, this is a region of which you might see it, okay? Again, 2860, 2876 is the concerted yearly record high. So if you get a break above that, you're looking for full-on resumption. But near term, into today's trade session, I'd be mindful sub 2870. 1618 extension from the advance off the low, trend resistance, slow. Even if we get rid of this, so mind you this, right? Let's scratch that. The slope that we've been following this whole time, the 50 line, converges right here as well. Okay. Roxy's still in the house. Okay, let's take a look at Bitcoin. So Pete, hope that helps on SPX. Take a snapshot of this if you want. Again, monthly open support is where I'd be looking for this thing to hold on. So I wouldn't even be surprised if we get a setback that deep. I wouldn't be short, but that's where you might look for re-entries on long. The breakout here, again, you have to be mindful of the record highs, obviously. We'll have to reassess things if we get above that, but those are the top side targets I'd be looking at for now. He says, thanks for that. Hey, you're more than welcome, sir. Roxy wants to take a look at Bitcoin, and so we shall. Let's bring up the Bitcoin charts. And Roxy's question was, could we possibly take a look at Bitcoin for a possible bounce target? I'd like to scale out of my long position. So 68.14 held, huh? We were talking about that yesterday. Nice level, 618 retracement from the decline off the lows. Or from the ascent, excuse me, off the lows, former swing highs. So you're looking for possible upside targets. Well, all right, let's see what this looks like. I bet you the 236 will be right on that 52, huh? So resistance, big resistance would be 74.70. Roxy, that'd be so there's a couple of things there. You have former monthly opens there, which is whatever, right? But 38.2 retracement. This is your 100-day moving average. And former swing lows, also the origin point for the breakout. So you look where the breakout actually started to accelerate. It was right around this region. So this would be your big resistance. Bearish invalidation is until here. So the only thing that would suggest sort of okay breakout mode would be that move above 78.62. So that's sort of what you'd want to see for a larger correction. Immediate resistance targets would be 72.27 and 74.70. These are both pretty big near term. Now, that said, let's take a look at internal structure and see if there's anything in price action as far as slope. It looks pretty decent on the median line. Resistance, resistance, break, support, support, support. A little messy here. Resistance, resistance, break, acceleration. I'm going to move those targets to right here. And obviously we're marking divergence all up into these lows, right? This is actually pretty strong divergence. So nice trade. Roxy, I'm not sure where you're long from, but nice trade as far as calling the directional bias on this one. Really nice gutsy call above 68.14. Watch this structure. I'm not not too crazy about median line analysis on the cryptos, but um, I'd mark these as soft targets. This would be a soft target here. Okay. Now, I just want to see what this is going to look like. Don't freak out. It's going to look ugly again. If we do something like that, which one's the low? Oops. I'd actually be more inclined to use this. Because the hesitation you see at the 50 line here before the push through, the median line is always going to be the biggest factor. The 50 lines and the 2 and the 25% lines, the 38.2 lines. It's great to see reaction there, but it's really all about the upper and lower parallels and the median line, the kind of reaction that you get along those slopes. So it's ugly to say the least, but that's the line that you start to converge on some of the other slopes. Thanks so much, Michael. I'm long from 69. Okay, so you're in at a good price. Nice, 69. Yeah. Okay. So, inherently, again, I don't know how long or aggressive a position you're trying to take, but inherently, you're at former swing highs. This is the August. No, your August open is still way far ahead. This would be the first area of support. I would say this, from a slope standpoint, yeah, if you're in from 6,900, as long as you stay above 69.80s, the objective weekly opening range highs, you're probably just going to want to hold on to that one, looking for these upside targets. But these are the kind of levels I'll be looking at. 72.27 would be, from a Fibonacci standpoint, that's just basic measured move. The confluence region on slope is around 73, just below. That's where things get a little dicey. At which point would you move the stop loss and to where? Roxy, so I always move the stop, or let me say this, I never take profit without moving a stop. It's just my rule of thumb. If I'm going to take something off the table, I will not take a loss on that trade. Net, it needs to not be a loss. So uh, a lot of times I'll bring the stop into where the net position would be break even. But most of the time, if I'm taking something off the table, the stop goes to break even. So, there's no possibility of a drawdown in the account once I've taken some profit. On a trade like this from 69, that's exactly how I'd play it. I'd have your limit here. Again, this is just my humble opinion, Roxy, okay? I'd have my stop right around here, these former swing highs, that confluence region. So I have my stop now locking in $81 profit, 69.81. You're long from 6,900. I would be taking a little off the table here, a quarter of the trade or more. The rest of the trade, again, 72.27, I take off probably another quarter with the rest off here. I wouldn't even look anything past 73 at that point. That's just the way I play, Roxy. I'm a much more defensive type of trader, making a lot more decisions on a daily basis. So I don't, get too wrapped up in any one position. But 71.46, basically what we just probed, that's where I would take a little off and stops up to that 69, 69.80, 69.70 region, this level here. Makes sense, Roxy? It says, thanks so much, Michael. That's very helpful. Cheers. Then my job is done. All right, Roxy. That takes care of all the questions and everything I had on the list for today. Best of luck trading, guys. Keep the powder dry just on a little bit of these trades because we're coming in some critical areas. So I do want to see how the turnaround is going to react. Here's Euro. Whoops, we're on the wrong charts. Obviously, these are the crypto block. Here's Euro. Again, just to bring your attention to that level that we were looking at on the intraday, here it is with the kickback. So if all of these are coming, just stretching into supports, Sterling still has a little bit lower to go into that key support area near 2877. Aussie, again, a little bit more upside to go. Wow, there's that 100 literally catching the highs here. So upside stretch for the consolidation is still a little bit higher, but again, I wouldn't be chasing this from here. Dollar yen could get a little bit of a kickback. The abomination is the abomination, but ultimately I do want to see that 110.88 break or tag at least. for support. So lots to track, lots to look at. Best of luck trading, and I will see you guys tomorrow morning, bright and early, same time, same channel. Cheers.